Success in Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. The date is February 18th. When will reality catch up to perception, to belief? That is the question. But we've got this thing happening right now called Greece, and odds are it's not going to be much longer. Nobody can tell when, but don't fret. It's going to happen. Here with us now, Andrew Hoffman. Andy, welcome, and how are you?
I am great. And, you talk about what is, reality has to change perception. What is the perception? That is the question. I mean, the mainstream media literally will just write anything these days when they write stuff like, the market is excited about the potential for a Greek deal. And I'm going to myself, what exactly Greek deal are they excited about? Does anyone even understand what these people are talking about or what has been proposed or said on both sides that they're excited about a deal, let alone would a quote deal be good for anybody? It's just quite remarkable. I wrote today, my article that's coming out today, it's called Sheep to the Slaughter. And again, I have to credit David Stockman. That's kind of where the title came from an article he wrote. Not that the article was about what he wrote about, but it's truly remarkable. Citibank did a survey yesterday where they asked all their investors what they think the number one most important event in the world will be this year regarding market action. And more than 65% responded central bank actions will be the most important aspect of the market, meaning they couldn't care less if we go to war with Russia, if Greece falls apart, if the euro falls apart, if oil prices go to $20 per barrel. All they care about is if the Federal Reserve, the ECB, the Bank of Japan, et cetera, keep printing money and manipulating markets.
Yeah, what difference do fundamentals make after all, right?
Yeah, I mean, you honestly, you can't make it up. And again, when I say the investment community, I use that term very loosely because it's not the, quote, investment community that I dealt with when I was a Wall Street analyst up until 2005. There's almost no investment community left. Everyone has lost their shirts in either 2000 or 2008. The hedge funds are going out of business in droves because they can't outperform the market, because they can't realize that it's broad market indices that are being taken higher, not individual stocks by the PPT. So there's really no one left except the handful of banks themselves that are getting the free money and supported by the PPT and the Fed that support stocks and bonds. That's it. So when you say investors, I'm not even sure who they're talking about anymore, but those that still remain are so fixated on the propaganda that Mario Draghi knows what he's doing and then Janet Yellen knows what she's doing. When every single point of evidence says otherwise, they still believe that these people know what they're doing simply because they have manipulated markets. And to that end, I look at, how the scope of market manipulation just increases exponentially. The newest market that's being manipulated is crude oil. And it's being done in the same exact way that they do with gold and silver, or I should say with the stock market. 10 o'clock a.m. every day, the same thing, the same dead ringer algorithm. I mean, oil was down $1 today, and all of a sudden at 10 a.m. it surged higher. Same yesterday. 10 a.m. it surged higher. That's the same exact time that gold gets smashed and the stock market bottoms. Day after day after day. So again, they really think that they can control this entire world. For instance, the Baltic Dry Index at an all-time low as we speak today, meaning there's horrible, horrible traffic. No one wants oil anywhere. And yet they think that if they simply print money and buy crude oil futures, that it's going to somehow improve things.
Well, it's only going to work for so long. It's been working quite a while now, but we know that eventually, whatever illusion of control that they do have is going to end, and the results are not going to be pretty, for sure.
Yeah, and as I wrote maybe 2 weeks ago, an article called Last to Go, I said they pretty much have lost control of all the markets. I mean, they're trying to recapture oil. It's comical how oil is $52 a barrel, and people act like it's bottomed when it has such horrible fundamentals, per what I wrote in Supply Response yesterday. But they really have lost control of everything except major stock averages like like the Dow and the DAX and the Nikkei, and paper, gold, and silver. Everything else, they've lost control of bond yields, which have plummeted, which are proving the most damning proof of QE failure yet, which I wrote about last year. They've lost control of commodities. They've certainly lost control of currencies, including the euro, the second or first largest in the world, and the yen, and even the yuan, which is at some point soon going to have to be depegged. So it's just a matter of U.S. priced, dollar priced gold and silver, and large cap stock indices. That's all they have left.
And then eventually the day will come, right?
Yeah, I'm not even sure what that means when the day comes. I mean, something wicked this way comes. Will it be the worst case scenario? Will it be, world wars, or will it simply be a worse depression than we can even imagine? I mean, it's going to be something, and hopefully not all, including draconian government efforts to destroy our lives. We can only hope for the best and prepare for the worst.
Yeah, our friend Charles Hughes Smith has written that we're living in an empire of lies. And it's not just the markets, it's really everything. Propaganda that everything is fine, that everything is back to normal, that just go about your business and don't worry about anything. And I guess most of you out there are content to just live in that delusionary state, right?
Yeah, but the thing is, most people are not. I mean, yes, most people don't understand economics, but the average person is not doing well. I mean, that's why you have an almost record low employment to population ratio, labor participation rate, real wages, home ownership, food stamp participation, debt, consumer debt, municipal debt, student loans across the board. Everything is saying that the average person is not living. We work in the financial world, so we are dealing with financial people, the CNBCs, the Bloombergs, the people who have net worths, high net worths, who say, well, the stock market is fine, so I guess everything's fine. But the average person doesn't own stocks anymore, or frankly could care less about what price the Dow Jones propaganda average is. I mean, I'm a financial professional who worked on Wall Street 25 years. I haven't owned a stock of any kind in 4 years, and I haven't owned a non-mining stock in 15 years because the market's so rigged. I wouldn't touch them with a 10-foot pole.
And the rest of the world, I mean, you just see it crumbling. You just go from continent to continent, and it's just shocking. And yet you see these guys in New York going to work in the morning on the train, and they're going about their little jobs there of working with the rigged algorithms. Like everything is just fine.
I mean, I was the last 7 years, I mean, I did everything, bond trader, stock trader, you name it. The last 7 years, I was an equity analyst. In fact, I was a ranked equity analyst with Solomon Smith Barney. I did oil field services and equipment. So I know a thing or two about oil. The reason that I left in 2005 was there were mass layoffs because that business died. I mean, the real business of capital formation and valuing stocks, based on traditional measures died. That business is not there anymore. The people are going to Wall Street now are not going there to do what people did 10 years ago. It's a much smaller workforce now, concentrated on, activities that are either illegal or unethical, such as taking free money from the Fed and putting it in supported PPT markets and, supplying commentary to support that, supplying propaganda. In a lot of cases, is inside information involved, and carry trades and high frequency trading. I mean, that's what they do these days. And because they've now created this epic bubble, which I talk about in my article today, the sheep to the slaughter. I mean, it's unfathomable to see the valuations in stocks now, not just higher than 2000, but way higher than 2000. And possibly that was the best economic environment of our lifetimes. And this is the worst economic environment of our lifetime. And, at the tail end here of the sheep to the slaughter, they've actually recreated the dot-com boom. I mean, there's a company called Grilled Cheese Truck.
Yeah, I saw that. Is that great?
$1 million valuation. This Snapchat. You know what Snapchat is? It's kind of like a Twitter where you don't write anything. You just send pictures. And it's predominantly known for people sending naked pictures of themselves.
And then they get deleted in like 5 minutes or something. Yeah,
they delete quickly. So, this is a thing where around the world you send pictures of your private parts that delete in a couple of minutes. And they're saying it's going to be valuable valued at $20 billion. And this compares to Barrick Gold. Not that I like Barrick Gold. They're horrible people and a horrible company. But $14 billion for the largest gold miner in the world, $20 billion for the most vile, disgusting, useless piece of garbage ever. It makes Twitter look good. And I honestly think Twitter is the downfall of the American language.
Hey, and let's not forget, mortgage rates have plunged to the lowest point in the year. Mortgage applications down to the lowest in the year, and rates have increased for some reason. Well, I guess the 10-year went up a little bit, so interest rates have gone up on mortgages. Not that it matters, but
exactly. This is the perfect. This is exactly what I wrote about today, about how they pushed rates. They didn't push rates. Rates were pushed down by reality. For instance, the 10-year to about 1.65%. And that was only a few weeks ago. That was right before the most fraudulent unemployment report in the history of economic data. And, at that time, there was an utter explosion in refinancing and mortgage application activity. I think in 1 week, it was at 20-year lows, all these things. Yeah. But because that 1 week it got so low, it was like a 30% increase or 40% increase in 1 week. Now, of course, the refinancings get done quickly, and then Fannie Mae, as we've discussed, quickly absorbs that debt onto their balance sheet. The housing doesn't get done. People put in an application, and the next week rates are up, and they withdraw the application. That's exactly what's happened since. What is going on now? For anyone who sees the 10-year that has gone from 1.65, it's 2.12 right now. This is a matter of 2 weeks. This is 100% a part of the Fed's little gambit that started 2 years ago. We are going to raise rates if it's the last thing we do. We don't care if we're in the middle of World War II and the euro collapses. We are gonna heed our promise and get that quarter point increase so we can say the economy is recovering. And what they are doing now, which is trying to push oil prices up at 10 o'clock a.m. and goosing that 10-year up to 2.15. For instance, today you have the Fed minutes come out in a few hours. They are desperately trying to not look like they're backing off their goal of raising rates. That's why in the December meeting, they said, don't worry, oil price drop is transitory. And then in their January meeting, they said, everything's fine. Yeah, don't worry about the plunge in oil prices, the plunge in commodity prices, currencies, Greece. Don't worry about that. Everything is fine. And then they come out with their, I wrote in employment American style. I still am almost speechless to think about that January unemployment report. It is so bogus in so many ways. Not to mention they reported this huge jump in real wages, which partly is due to mandatory minimum wage increases, which aren't going to benefit anybody. But this morning, they said January PPI, even excluding oil and gas, was the biggest drop ever. And they're trying to tell us that same month was the biggest jump in real wages in, decades. It's just off the charts. They so badly want to be able to say, yes, we're raising the Fed funds rate by a quarter point. We were right all along. And that's why they've gone into utter hyperdrive. They want gold under 1,200. They want the Dow above 18,000. They want the 10-year above 2%, but not too high above 10%, and they got to get oil back up. But the question is, as you said, how long can they maintain this veneer? How long can they stop economic Mother Nature? How long can they stop the reality of Main Street from being the important story, not the fraudulence of financial markets?
And here's an interesting statistic. The bank rate, for whatever it's worth, says 1 in 7 people don't even know what rate they're paying on their mortgage. So if you're cutting mortgage rates and roughly 14%, 14.5% of the people don't even know what rate they're paying, what good is it really going to do anyway?
And more importantly, the big pink elephant here is we have, I think we're at like a 25-year low in home ownership. And we're also at close to an all-time low in new home formation, meaning for younger people. Even on CNBC this morning, of all places, they had a study that showed 10 years ago, 26% of millennials were entrepreneurs and only 23% are now, meaning there's 19,000 fewer jobs being started per month than there were a decade ago. But average student debt has gone up from $18,000 then to $28,000 now. And now you have in more than half the states, or I should say more than half of the American youth are living with their parents up to the age of 25 or more. So again, the whole concept of believing that there's growth and that there's housing market upside is beyond belief. Today, for instance, you see the housing permits numbers and starts numbers. And they were down, and they were down more than expected. Not that anyone ever cares about that stuff. But more importantly, the breakup, it's all multifamily rental units that are being built. The single family homes are collapsing. No one's building them. No one wants them. And that's where the so-called recovery is based on. And the refinancing of such houses, which when the Fed pushes rates up about to 2.2%, the measly rate, it collapses and no one can take money out of them anymore. I mean, it's that tenuous right now. It is, in fact, an empire of lies.
Yeah, that really is it. And hat tip to Charles Hugh Smith. And, that's been around a long time. Our friend Congressman Paul wrote about it even before Charles Hugh Smith. I mean, I think it's been around for a long time. And until that empire of lies collapses, I don't think there's much hope of anything changing. But Andy, somehow you've got to find your own internal happiness here. You can't worry about the fact that rig counts are in the toilet, that we have record high oil inventories, or the Baltic Dry Index is going down the drain. I mean, I'm sure you read about the fact that the Chinese are disassembling Costco. That's their shipping company. Chinese overseas shipping company is disassembling container ships now. They were on a rampage for the past 30 years building new ships at breakneck speed. Now they're basically stripping them down for scrap. That's how bad the Baltic Dry Index has gotten.
The Baltic Dry Index is down 7% this week to 516. I think the all-time low is something like 540 or 550.
Yeah.
So we're plummeting below levels, not just for 2008. I mean, think about it. There wasn't even any business at the lows in 2008. People were in deer in headlights. But it's below the all-time low levels, which go back to the mid 1980s. That's the level. That's why I've been saying, I wrote, I think it was October 7th when oil was still $81 a barrel. I wrote 2008 is here. I wrote that then. That was before oil collapsed. All the signs were there 3 or 4 months ago. 4 months ago. And here we are where things have gotten dramatically worse in the 4-month period of time. That's why you had the crazy QE by the ECB, and now likely the breakup of the euro in some way, shape, or form in the foreseeable future. Why you saw since then Japan extended, made bigger Abenomics. And across the world, the collapse in currencies, the CRB index, the Bloomberg Commodity Index, I think a few weeks ago hit an all-time low, or a 15 or 20-year low. And yet we're told that the U.S. is decoupling. Everything is great here, even though 2.8 million people actually lost their jobs in January because it's, that's a lot of the seasonal stuff goes up. They determined that 2.8 million of job losses was a seasonally adjusted 257,000, just like in December, when their numbers showed that 5,000 people got jobs, but they decided it was 350,000 people. And we're supposed to believe that this is what the reality is, when every other piece of evidence says otherwise, not just here, but everywhere in the world.
Well, Empire of Lies, right?
Yeah, I think that was a book. No, Empire of Debt. That was, what's his name, Bonner's book.
Right. Yes, correct. And this is why you can't believe anything that you read. And not that we're always going to be right here, because let's face it, we've had our share of wrong calls for sure. But when in doubt, just assume that they're lying to you. Correct?
Well, I would disagree that we've had, quote, wrong calls, because we are not market timers. You don't hear us talking about, I think the Dow will crash this year. Heck, we haven't even said stuff like, we think gold will go up in the next 6 months. I mean, it's inevitable.
No, we never make market calls. You're correct.
Right. I mean, but if you ask, what have we predicted would happen? If you look at everything I've written, it's chronicled for years, especially since I started Miles Franklin 3.5 years ago.
Absolutely, the euro. We called the euro.
I said 2 years ago, Greece is my number one pick for most likely to take the whole system down, among other things. And what I've said about the economy and all these things going back to the year 2000. So I can't say it's a matter of wrong. What I obviously underestimated was how much markets could be taken over. But again, there's paper markets and there's physical markets, and then there's the Main Street and the Wall Street, reality versus non-reality. Reality will ultimately win.
Yeah. It's how much damage will be done for the markets to actually reassert themselves? That's really the issue here, Andy, right?
Yeah, well, to me, it's point of no return. It doesn't even matter at this point. You can't make things worse. It's not like, well, the U.S., for instance, has $18 trillion of debt, let alone the $5 trillion off balance sheet for Fannie Mae and Freddie Mac and the unfunded liabilities, et cetera. But at $18 trillion of debt, it's so ridiculously unpayable. It would be the equivalent of me owing like billions of debt, right? So if it becomes 20 trillion or 25 trillion, I mean, is it worse damage? You default. I mean, you default on $1, you default on $1 million. So it's the same thing. It's irreversible, as bad as it could possibly be, off scale. And, the only question is, will the end game be a worst case scenario, or will we be fortunate that it's not? That's the only question as far as I'm concerned. And of course, the how and when. And, it's not when, sometime well into the future. If you live anywhere but the United States with its strong dollar, because people are rushing into it because they're terrified because there's more liquidity, you've already seen it. I mean, we're talking about, quote, first world countries with currency collapses ongoing. Canada, Australia, Japan, pretty much all of South America, Turkey, Indonesia, you name it. Oh, the euro. I'm sorry about that. The euro is almost at an all-time low. It challenges the dollar as the largest currency in the world. The Russian ruble. It's a real country with real people.
Yeah, and pretty soon you're going to see the yuan collapsing as well, right?
Well, not collapsing. It'll be depegged, which will make it. Even the smallest change in the yuan exchange rate is like a gigantic earthquake on a scale, a 10.0 earthquake. If it actually had a significant fall like the yen, which is what they'd like, because the yuan is pegged to the dollar, so now it's up 30% against the yen, and it's losing market share. So what they really want is a 30% drop against the yen, which they may well get. I mean, how bad can the situation be? They built $25 trillion of debt in a 5-year period with this ridiculous, idiotic communist government that just fosters the worst bubble of all time. I do think that, and I've said it before many times, that they are going to depeg it. And when they do, the yuan will fall. If it falls a lot, forget it. We'll have World War III within minutes. If it falls even a little, the economic ramifications will be beyond description.
It's going to fall a huge amount, Andy. Think about it. It's going to fall a huge amount.
I think that's
currency wars. Currency wars are alive and well, and forget it. Forget it. It's going to be a huge collapse, and World War III. Well, I think there'll be riots in the streets there. Look, I don't want to get alarmist. Yeah.
I mean, the problem with China is, yes, they have taken all of the market share of the world. Because they have low-cost labor. And yes, they've been, buying all this gold, which is, and probably a lot more than anyone can imagine, in preparation for, the next era, which I'm not saying the era starts tomorrow, but in the future, he who has the gold. But between now and then, I mean, they have the biggest bubble in history, which is collapsing as we speak. They just announced, reported yesterday, the biggest monthly decline in Chinese housing prices ever. Et cetera, et cetera. That has to be broken up, and they have 1.5 billion communist mouths to feed. Yeah. So yes, they have some capitalism there, but the large majority of people are still mouths to feed, and that's why they've deformed their economy even more than any other country on the planet.
Hey, Andy, I just want to make one thing adamantly clear that people keep saying, "Oh, there's going to be a gold-backed renminbi, blah 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 blah." And that's ridiculous, because the last thing they want is gold-backed currency, in which case they can't play God anymore, right?
Of course, and I've said this all along. The thing with China, where people bet on China because they have all the gold, it's not the current China that's going to be the winners. The current China, as we talked about, is going to at some point see a significant drop in the yuan, which is going to cause cataclysmic economic ramifications the world around, including in their country of 1.5 billion people that have $25 trillion of debt and all these empty ghost cities and houses that have to be liquidated. And the people that are in charge of the Communist Party there now are not going to be there when things improve. They'll be long gone.
They're going to be held responsible for all this.
Yes, they will be the collateral damage. In the future, and I mean, when I say future, that is a very, very ambiguous term. 5 years, 10 years, 100 years. I don't know. this whole system, when this system is gone, this decrepit financial fiat currency system is gone, the new world order, and I don't mean like a handful of people that make decisions, but the leadership, economic leadership of the world is going to be the people who have the market share and the gold. And the market share and the gold are going to be in the East, with China probably having the most market share and the most gold. Right. But that's not now. We got to get across the canyon of here to there, and that is a very painful canyon to cross for the Chinese as well as us.
Yeah, and nobody wants to cross it, and therein lies the problem. Till we get to the point where people have to accept the reality, what's going to happen then? Well, that remains to be seen, but we're not there yet. We got a long ways to go. So keep the faith. Find Andy's work along with Bill Halter, two guys I look to a lot to figure out what the heck is going on at milesfranklin.com. Check out financialsurvivalnetwork.com, constantly being updated. We are the anti-mainstream media. That's what you need to be looking at, because at some point the bubble is going to pop. And then where will you be? Okay. Financial Survival Network. Sign up for our newsletter, our mailing list. Got webinars coming up major in the coming months ahead. Andy, talk to you next week.
Thanks a lot. Look forward to it.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.